Welcome, fellow investors. Recently I shared an interview with Rudi from Seabridge Gold, but since we were short on time, we could not cover one specific topic that I would like to divide into now. I shared this with my community last year, and I even discussed the principle with Rudi back in November in New Orleans, and he agreed with the logic. This is a valuation method for Seabridge. But is it the best one? No. It's just one way to look at it. Is it 100% accurate? No. In fact, the numbers I'm showing you are from last year. But it's a simple napkin math, which I'm a big fan of. So I like easy stuff. Often you don't need to overcomplicate things. A simple perspective can reveal the essence, and that's what I'm trying to show you today. It is very simple, I walk you through it. So even though the stock has climbed nicely over the past year, I still think it's cheap. So why is that? I put together this table with a few random companies just to give you the big picture. I walk you through it. If we look first at the major senior gold producers, how many ounces do they have in the ground? Okay, counting measured, indicated and inferred resources. Furthermore, we look at their market capitalization. Then you divide these two numbers. It turns out that 1 ounce in the ground is valued between $320 and $971. More likely between $300 and $600 per ounce. Okay? Just a big picture. The ones at the top of the list are the most likely candidates for a partnership. Of course, Rudi can't be too specific about this. He can't just say the name starts with a B and ends with Rick, because we are very smart and we would figure out it instantly. The time just simply hasn't come for that yet. So in our next step, if you look at the developers that aren't in production yet, the spread is understandably wider, but an ounce is valued around $40 to $188. Okay, something roughly between 40 and 190. Obviously, the market puts a higher premium on an ounce that belongs to an experienced producer because it's about to be mined. There is much less risk involved than with a developer. So an ounce in the ground with a developer must be cheaper, and that's exactly what we see. That's natural, as is the wider spread among the developers, since every project is unique. For Seabridge, which is still a developer, this value was $16 last year, or something like that, not long ago. Today it's more like $24, $25. So it is still very cheap, but you have to consider the risk, of course. In my opinion, this project is 100% going to happen. And as the company reaches its final investment decision and enters the second upward leg of the Lassonde curve, the value per ounce in the ground should converge toward this $300, $600 range I mentioned earlier. Of course, I can't predict the exact share price. It's a multivariable equation. But ceteris paribus, all else being equal, the price should rise in the future. I believe we could see a multi-bagger move over the next 5 years. It is cheap today because the market still fears the project might never move forward. But I trust Rudi and Marcus. They explained exactly why this project is needed and why it has become feasible. You can find those details in our full interview. I hope you enjoyed this short video. If you did, please recommend it to others, hit the like button and subscribe to the channel. Thank you very much. See you next time.